Now, right now, we have the head and shoulder formation still very much in play. We got the run up on lighter volume. Here's a NASDAQ, and again, from the April low, we broke this trend line here from the right shoulder low. We broke this trend line, back tested it, came down to 100 period to the cloud right here, and to test that October 10th low. As I told you at the top, that's where I thought we were going. We hit it. But then I told you I thought we'd rally back up to get these right shoulders. We did do that. Look at what happened. We broke this trend line. If we take the low right here where we bounced and back test it on the NASDAQ, you take it a trend line from that low and you back tested it a week and a half ago. You broke down and back tested it a week and a half ago with that bearish engulfing candlestick. I told you I didn't think that candlestick would play out. I thought it was like over here where it began really the formation of the head formation that followed that. Here I told you I thought would follow the formation of the right shoulder. That's what we got, but we're back testing this trend line, so I find that interesting. We still have the gaps overhead that I'll be talking about in the video and that I have been talking about over the last couple of weeks, but again, interesting that we are possibly back testing this area here. In order to sell off, you got to take out the 50. That's this green line right here, and you got to, which we drop below it, we got back above it. You got to take it out, and then you've got to get that 20 period dropping below the 50. We've already got the 10 periods below it in the daily time frame, which you'll see in the video, and we got to take up the 100 period in the cloud to move back towards the 200 to see a bigger sell-off. Watching, do we get a sell-off in December with those bearish hanging man candlesticks that formed to close out the month of November? S&P did the same thing. We formed this rising wedge. We broke down from it. We back tested it. And then from our low here, we could draw another trend line. We broke down, back tested it. We're back testing it right now again. So again, did we get the right shoulder surrounding this area, or do we try to get a 2022 scenario where we try to go slightly higher and end up forming a little miniature double top? Is what we had back over here at the February high, which is what we had at the 2022 high. So again, we do start to sell off, dropping back below the 50. Then the 20 can cross back below it. The 10 is already below the 50. So I'll be watching, see if the institution starts selling immediately, or do they let the herd run it back up? Now you have these potential trend lines with the trend lines that broke the lows that formed with that previous rally. That's when the Dow had made new highs, but we didn't see it with the NASDAQ or the S&P 500 or the Russell. You know, last week the narrative was, oh, the Fed, they're gonna raise rates. We saw the Fed fund futures here currently at 87.4% that we get a quarter point cut in December, 67% chance, 67.5% chance in January, and by March, 49%. Where again, if the Fed doesn't cut, they're fools. They should be slashing rates. Recession's about to start, and again, I've been predicting it would start this month in December or in January. I think we'll see the market go lower and play catch up to Bitcoin, which is today collapsed 7%. Ethereum's crashed by over 8%, rebounding off of those lows. But again, the sentiment is, well, not going to cut in December. And again, eventually we're going to get the jumbo cuts. I think that we'll see Bitcoin go lower, and I think the market will play catch up. And I think that will be by January, over this month of December and on into January. I think we'll see a dramatic drop in the market, play catch up to Bitcoin. But right now, 87% chance that the Fed cuts in December. And again, the narrative in the crypto community, the Fed's been cutting, and every Fed cut, September and October, has marked an important peak for Bitcoin. And I think the December peak will see them likely cut. If I'm wrong, they're fools. I do think jumbo cuts will happen by January. If I'm wrong about January, and I have the guts to tell you what I think it's going to be by January. We get it before the January meeting, late January, which is, you can see right here, January 28th, right here on this chart. January 28th is that meeting in late January. I think by then we will get the jumbo cuts. If I'm wrong, it'll happen in the first quarter. But again, the stock market is going to need to play catch up to Bitcoin. Bitcoin's already confirmed a bear market in the weekly time frame and in the monthly time frame. See my latest Bitcoin video at the end of this video showing confirmation of that, both the weekly and the monthly time frame. Experts continue to predict that Bitcoin's going to go make new highs. The stock market has a positive correlation with Bitcoin. Eventually, it will follow. Just a little while from now, we're going to have Fed Chair speaking, 8 p.m. Eastern Time, 5 p.m. Pacific Time. Another hoax out that, oh, Powell's going to resign. The same one they did a couple months ago. Powell's going to be resigning when, again, he's going to be making comments. Today is the day that quantitative tightening is ending, and Powell's going to resign and call an emergency meeting today. And supposedly as he's going to this meeting, he'll be making a speech and then making other comments. But again, people with their hoaxes are just absolutely incredible. Powell's going to be there until May. Trump's likely going to appoint the new Fed chair, announce the appointment for the new Fed chair. Might be his economic advisor. Sure looking like that's going to be the case. And that's according to the Treasury Secretary, that's going to be announced before Christmas. So we'll be watching that. If crypto continues to collapse, which again, I think it's going down 50% on Bitcoin before it does. It's only seen a 36% drop. Bitcoin's currently in crash wave 3, by the way. The market's going to play catch up. Markets start dropping again. Maybe they try to rally on that, whatever this announcement is, or whoever it is, or if it is Trump's economic advisor. We'll get Fed Chair Powell. We'll see if the markets and tomorrow and futures overnight. We'll see if what happens with that. Whatever he has to say. Remember, he's taken a hawkish tone. Pretty much canceled the rate cuts for December. Right now, Fed fund futures are still suggesting that's going to be the case. It had went lower and then it went back up. We'll see if it goes back lower. Does Powell rattle the markets if he takes a hawkish tone? I don't know. You never know with Powell whether he's going to wear his dovish hat or a hawkish hat. He's very, very fickle. But recently he's taken a hawkish tone and in recent days, again, said they've done enough to stabilize the labor market. At the last meeting, that's what he said, the last press conference, and that they don't feel it may be necessary to cut in December. And Powell said it wasn't a foregone conclusion that they're going to cut in December. But again, the cutting campaign will be bearish and associated with the bear market and the coming recession, as it always is. We'll get the ADP report, the private payrolls on Wednesday, expected to be 40,000. Another weak report, previously 42,000. By the way, we just got the ISM manufacturing, came in just below the expectations, 48.8, came in at 48.2, still below that 50 level, which is problematic for manufacturing. And then we're going to get on Friday, we're going to get the PCE inflation data on December 5th. Normally we would get a jobs report on the first Friday of December here. The government shutdown, a lot of this stuff has been delayed with the GDP or some of the economic reports we won't get at all. It'll just be reflected in future reports as previous data. So again, we'll be watching. Next week on December 10th, we'll have the Fed. And again, the last cut in October led to sell-off, Bitcoin and the stock market. So again, we'll be watching to see what the Fed does. Again, I expect they're still going to cut, but I wouldn't put anything past them because, again, they're as blind to what's going on as Mr. Magoo, and they don't believe the recession indicators. So again, maybe we get a hawkish cut again like we did the last time, where they take a hawkish tone and markets sell off. Markets sold off in 2007 along with all of that. And the Fed did not start doing jumbo cuts until markets panicked and collapsed by over 20%, which is what I think is going to happen here in December and January. Already happened with Bitcoin, and the market's going to play catch up. We had a sharp down day. We recovered off the lows, but still a bad day. Breaking the winning streak from last week, the 5-day winning streak. And then from that previous Friday, we only had a 4-day trading week last week with the Thanksgiving Day holiday. I told you that, again, we could see retail investors run it back up so that the institutions can come back and sell. And I still think that's likely going to be the case. But I did talk about that 2022 scenario Institutions still tried to push it higher. Right now we're seeing the sell-off. The Dow drop 427 points, down almost 1%, down 0.90%. The S&P was down just over 0.5%, 0.53% lower, down 36.5 points. NASDAQ was down 0.38%. The Russell was down 1.25%, and the VIX was up 5.44% to close at 17.24. We've had Bitcoin having the worst day since March. Bitcoin at the lows today was down 7%. Currently, it's down 4.5%. But again, Bitcoin's already topped, already had the wave 1 and 2. We're in crash wave 3 right now. Market is likely going to play catch up. Bitcoin's likely going to drop back down to the 74,000 area, which is the April low, which again, the market will eventually follow Bitcoin. I had predicted before Thanksgiving, we see a Bitcoin bottom and get a rebound back up to the 20-period moving average, and that has happened. This is a 4-hour chart, but the 20-period moving average. I think Bitcoin is leading the charge lower, and the market will eventually play catch-up to Bitcoin. Bitcoin had formed that head and shoulders, and I think that's what we're getting right now with the S&P and the NASDAQ, although I did talk up over the weekend about that 2022 scenario. If we end up seeing a divergence between the NASDAQ and the S&P, I guess as the head and shoulders pattern is likely to sit up on both of them and follow Bitcoin. Once that's set up on Bitcoin, it crashed, began to crash, and broke down, back tested, and we saw this 36% decline. I think Bitcoin's still going lower to the April low, which if I move this over, you can see the April low back over here. It bottomed the same day as the stock market, April 7th. Bitcoin's doing what it did when it peaked in 2021. First, Bitcoin, the asset with the most volatility, peaked, then the NASDAQ, and then the S&P. But I told you this time around, the S&P could peak with the NASDAQ because it's NASDAQ Junior. If these head and shoulder patterns set up, I mean, it's behaving like a NASDAQ Junior. I think Bitcoin will end up setting up the diversions and go down to that low and eventually take it out. When Bitcoin collapses, starts bear markets, it usually collapses 40-50%, down 36% now. So again, my signals did a really good job of marking the top for Bitcoin in this crash. The stock market, and what Bitcoin did over here in going sideways, forming its head and shoulders pattern. So again, expect the stock market is likely to play catch up. Bitcoin's trying to recover off the lows, but it's getting rejection at that blue line there, the 20-period moving average. So showing you this because this is what I think the market is going to follow, the pattern that we've seen with Bitcoin already. And again, rallying into resistance, forming the head and shoulders, and that's what we have with the NASDAQ and S&P right now. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, let me know that by supporting the channel today. If you could take a moment to help out, I would really appreciate it. Follow the link below. It'll take you to a secured site and you can donate any amount you want. I thank you for your consideration for that. The VIX was up today, but it didn't close at the highs. It was up to 18 to just under our 50-day moving average. That's that green line you see right there. But it's got this bullish falling wedge. Attempted to break out of it today. Didn't quite do it. It ended up kind of closing right on the trend line there. Watching to see if the MACD is going to firm up because the stochastic has become oversold again. And if it begins to recycle back up like what we had over here, well, over here, that's when the stock market peaked and NASDAQ sold off nearly 9%. And S&P ended up selling off nearly 6%. This bullish falling wedge just under our 50. Here we have another bullish falling wedge just under our 50. And again, you get back above the 50, bad things are going to start happening on the S&P. We're right at this trend line right here. So again, we'll be watching to see what happens with the VIX if we see that stochastic recycle back up, if we see the MACD try to firm back up and remain in positive territory as it did over here. We had these waves of selling in the market as volatility increased sharply. Last time around, that produced a 21% drop. Again, a good shot of a big sell-off if we get the VIX back above the 50-period moving average like what we had over here, very similar looking to this bullish falling wedge, and we start seeing volatility sharply increase. Now, I told you back on October 29th, the day of the Fed meeting, that I thought we would peak that week. I told you, thought that we topped that day. I still think that, but I did warn you over the weekend that sometimes NASDAQ and S&P diverge at tops. And when we saw the 2022 top on the S&P, it went higher. NASDAQ did not. Went about just over 1.5% higher, forming that divergence in 2022 on S&P. And then it had the fall by the 2022 sell-off. NASDAQ and S&P peaked together. That won't happen. Both slammed into resistance up here. I told you to be looking for a move back to these October 10th lows. We got it. And we dropped 9% on NASDAQ, nearly 9%. I told you going into Thanksgiving, the week before Thanksgiving, to be looking for a rally back up for the right shoulder. And I think we've got that. It is a lopsided pattern. Gaps lower today to the 200 period moving average. And we went back, filled the gap on the NASDAQ, forming a little divergence on the RSI here, the 60-minute time frame. So the 50 below the 200 period. It's very similar to Bitcoin's chart, forming the right shoulders that the 50 had dropped below the 200 period. Actually, it formed the right shoulder on Bitcoin and dropped back below both of those moving averages in the 4-hour time frame. We're seeing the sell-off, and again, today at the lows down 7%, and it's dropped 36% from the highs. The market will eventually play catch-up. Bitcoin's moving back to the April low. The market will do the same. Bitcoin's a leader of the pack. And here's the nearly 9% drop here, and we had that winning streak. NASDAQ 100 was down 0.36% today, breaking the winning streak, and it was down about 92 points. We did get a hollow red candlestick as we went back to fill the gap. Watching, does the right shoulder form here or not? And if we do drop back down, taking out the 20 and the 50, the 20 could be on its way dropping below the 50. We've already seen that with the 10-period moving average. The bearish arrangement of the moving averages would likely take us back to test this low and take it out for the neckline of the head and shoulders. Excluded that low and just connected these lows over here. Maybe we have more of a horizontal neckline, including from this low rather than that low, but from some of these previous lows in September. Seen signals turn back to bullish. Momentum's turned back to bullish because we're going sideways, and you can clearly see that on this chart. We did turn off a major resistance. We do have this possible head and shoulders, and we have that larger broadening formation on the NASDAQ. We've got that larger broadening formation. We had the breakdown of the rising wedge and back testing. So again, we're back above the 50 on lighter volume with the holiday trading. So again, we'll be watching, do we drop back below that 50-period moving average on both the S&P and the NASDAQ? End up getting these right shoulders. You get the larger head, the smaller head and shoulder formation, and then you got this larger broadening formation. You got it on both NASDAQ and NVIDIA. NVIDIA's also got the little miniature head and shoulders pattern in that larger broadening formation as well. Whether that is done or not is to be seen. We still have these gaps up here. They may be filled at a later date. We don't know. It's not required that they fill, but still possible. Right here, we had an update, but you've got the 10 below the 50. The 20 is about to cross the 50 in a bearish arrangement of the moving averages. NASDAQ's bounced off the 100 period. NVIDIA is hovering just underneath it. NVIDIA was up 1.65% today. It opened lower, but then rebounded and closed positive. So we got that recovery with NASDAQ off of the lows. And that ended up giving us the gap fill on NASDAQ, filling today's gap lower off of Friday's highs, that abbreviated trading session. Got the gap way up here as well. Again, the gap may not be filled until a later date. Still possible. If it does attempt to fill, then we might get a divergence between NASDAQ and S&P, as I talked about that 2022 scenario over the weekend. Again, I'm not predicting that happens. I'm just telling you it could if the right shoulder scenarios do not play out as they did with Bitcoin. We may get a rally closer to this level, and again, have NASDAQ move up into the trend line, which would be slightly higher than the previous peak. Remember, the 2022 rally only went just over 1.5% higher than the previous high. So remember that. And again, let me repeat, I am not predicting that happens. I'm just telling you, if the head and shoulder pattern does not set up on the S&P, NASDAQ tries to go to this gap, then that divergence between the two could still happen. If Bitcoin continues to sell off, the stock market might set up the right shoulder and begin the right shoulders and begin to play catch up. Remember, we got those hanging man candlesticks in the monthly time frame to close out the month of November now, so I'll be watching to see if they produce a reversal. And by the end of December, do they get confirmed with a close below the November low? So I'll be watching. Here's that hanging man on the S&P 500 monthly chart as it slammed up into major resistance in October and just below it with our high in November and the close. Just quickly, here's that hanging man on the NASDAQ monthly chart. So I'll be watching these candlesticks. It was a bullish hammer that called the bottom on both of them. The S&P here, hanging man here, NASDAQ, a massive bullish hammer at the April low, and now a hanging man candlestick. We'll be watching to see what becomes of these candlesticks. Do they get confirmed by the end of December? Again, this is a monthly chart. You get one bar per month. Here's what happened today. We had a gap lower. Futures had opened and then started to drop. And by the time we opened with the market, the opening bell, we gapped sharply lower, rebounded back up towards the 50 here on the 5-minute chart, got a higher low, and eventually made our way to try to fill the gap. We did fill the gap on a closing basis with the NASDAQ. We only did it with that bar on an intraday basis with the bar itself, but did not get an intraday push above the close that we had there on Friday on, again, very, very light volume. Ended up dropping down, formed a little rising wedge, ended up dropping back below the 50, back below the 200, and we closed back testing the 200. We get further selling pressure. If that's all she wrote, we'll fill that gap on a closing basis. Remember, we were just about a 1.5 or so away from that gap fill at 68.52. We didn't fill that here. We were just under it, and today we didn't fill it either. Gaps maybe get filled at a later date. They don't have to fill, but if we try to fill them, they're directly overhead. If we go down, will the 50 cross back below the 200, give us a bigger sell-off? We're below the cloud. We tried to get back above it, drop back below it. We're kind of going sideways here in the 5-minute time frame. For the 200, we're trying to form a little diversions here in the 5-minute time frame. Whether it's done or not, who knows? And will it even complete? We hold below the 200, and that if we get a bigger sell-off, the 50 would cross below the 200. So I'll be watching this gap here, and I'll be watching the gap 68.52. We didn't fill it. We may not, but it's just some areas I'll be watching. This gap right here at the 68.50 area here, or I should say just under it. The actual close was 68.49. And again, we did not fill that gap. We don't have to, but just something worth watching. Again, by dropping 0.5%, we didn't close at the lows, but we didn't close at the highs either. We turned off of the highs of the session, ended up dropping down 0.5%, over 0.5%. We broke this trend line right here, the slow here, and the one of the intraday lows there from Friday. Broke this trend line here in the 15-minute time frame, gapping lower, going back. Again, you still have a gap fill here at 68.52. We didn't reach it. Now we have another gap at 68.49 from today. So you got a couple of gaps right there. Again, I expected the bullish diversions to play out and give us a rally for the right shoulders. I think we've had that now. We'll be watching to see, do the institutions now begin to sell off as they let the retail traders run it back up on lighter volume. These divergences on the RSI and on the MACD have given us the peak back over here on October 29th, the lower high. Do we get another lower high here with this divergence? We'll see what happens with that and with these gaps that I'm watching, 68.49, 68.52. And the rally back up, and here's the 68.52 gap directly overhead. We were just below it there on Friday on a very, very light volume. This run up got a candle of indecision on the S&P 500. Hollow candlestick on NASDAQ as we went back up to off of the lows to fill the gap. We didn't quite do it on the S&P, filling Friday's today's gap with Friday's high. Right above that, you have the gap from back over here, which again, 68.52. So we'll be watching to see if we fill those gaps. Got another gap up here at 68.92. Again, I don't know that we fill these gaps. We may not. The 10 below the 50, the 20 is just above it, just like on the NASDAQ. And you got a candle of indecision here in the form of a doji. NASDAQ goes back and tries to fill the higher gaps. S&P could try to challenge this level. I've addressed that with the 2022 scenario over the weekend. I'm not predicting that's going to happen. I'm not saying it will happen. I'm just telling you, if we don't get the right shoulder, sometimes NASDAQ and S&P diverge. And when we saw that happen in 2022, it just went a 1.5% higher from the previous peak. I don't know that it does that again. We're clearly going sideways, as you can see on this chart, the potential head and shoulders pattern. Here it is on the 60-minute chart. Again, we went back up to try to fill the gap. Didn't quite do it on a closing basis. 60-minute chart, turned back down. We already had this divergence on Friday with the S&P. NASDAQ completed a divergence by going higher today. And right now, did have a divergence between the two on the 60-minute chart, where we did get a lower high on the S&P and a slightly higher high on the NASDAQ in our current rally in the most recent price action. So they are diverging today. Does that mean anything? Does it translate into a bigger pullback? We'll have to wait and see. Again, I told you these divergences had formed on the RSI and on the MACD, and I told you I was predicting that we would get a rally for Thanksgiving on lighter volume, which we did get. And I told you I thought that the herd would, the institutions would let the herd run it back up so they can sell into it. And that's what we keep getting with the institutions. They keep selling into the rallies. So do we, and we got one right there too. And do we get one right here? We'll see what happens. And if you do, you've got the head and shoulders with the slanted neckline sloping lower. 50 is still below the 200 period. We start selling off and dropping below them. Again, you can see what happened with Bitcoin, where we rallied back up to get the right shoulder, and the moving averages remained bearish on the 4-hour chart, which is almost equivalent to the 60-minute charts here with S&P and NASDAQ. Talked at great length of detail about these channels and how we slammed up into the upper channel line here in 2025. The NASDAQ 100 weekly chart from the 2018 and 2020 low, the channel here, and you've got the broadening formation. As I've said, back over here, NASDAQ in 2021 peaked, made a lower high in 2022, while S&P slammed up into the trend line again. I talked about that 2022 scenario for the S&P, and NASDAQ in 2022, early 2022, got a lower high. See that again. I still think the head and shoulder patterns are more likely, but that is still a possibility. A repeat of what happened in 2022 with the divergence between the NASDAQ and S&P. So keep that in mind. Sometimes double top patterns form, like the S&P got in 2022, just a little higher, trigger all the stops, and then you tank, which is what we saw happen throughout 2022. I don't know that that happens again, but it is something I am watching closely. You see on the weekly chart here, again, S&P's channel. This is our linear scaling from the 2020 low connected to the 2022, 2023, 2025 lows. In 2022, if we draw a parallel boundary, we've hit it, turned off of it, broke the rising wedge. Now possibly a right shoulder in play, but the risk is that NASDAQ and S&P will end up diverging. In 2022, the S&P moved just over 1.5% higher than the previous peak, as I talked about over the weekend. NASDAQ made a lower high, and they diverged, and then we got the big sell-off in 2022. Is what they did is they ran it up, formed a little miniature double top pattern, triggered all the stops, did a short squeeze, pushing it slightly higher, and then the sell-off happened. We could see something like that happen again. The institutions don't immediately start pushing it down. Let it run up a little higher. But again, even if they do even if we do have a similar situation here, you've got major resistance directly overhead, the upper channel line. Either institutions are going to sell right here and now for the right shoulder, or they're going to sell up there. But I did talk about this at great length of detail. This scenario, if we don't see the right shoulder play out, I think the right shoulder will likely play out, and I do think that we've likely seen the peak. But I always give you alternative scenarios, because right now we're just going sideways. And that's pretty much what we did over here. We went sideways, but same thing over here. as I talked about the February peak, he went slightly higher above the previous high. Then you got the 21% sell-off. Do we see something like 2022, early 2025 here? Do we see something like that again or get the lower high? That's what I'm watching.